All right. Closed. No girlfriend aggro. Good to start here. So it was a not so interesting morning, it seems, or nighttime. That's okay. Been a lot of excitement. Slept like a rock. Feel great. Everybody else is feeling good. All that Q3, the US stated they had one of the largest recoveries with a 33% annualized GDP gain in the third quarter. But what they don't tell you, or what they don't highlight in those articles, is that that 33% annualized is a really, really stupid metric in general, just really deceptive. But there's a habit of measuring GDP in annualized gains, which probably just so they can run their numbers. But what they really don't tell you is that that's coming off of a 32% loss in the quarter before. And so while most people, and maybe a lot of you, it's early, are thinking, oh, well, that's a good thing then. Well, that's one of those tricks of percents, and that's why I always encourage everyone to start thinking in percents. Because, all right, say that, let's just start with GDP being 100. So the math is really easy. So GDP is 100 and it goes through a 31% decline. Now GDP is 68 or 69, right? From 100, 31, 32% loss. 60, let's go with 69. I don't know, make it simple. So it starts at 100, goes to 69. Now it has a 33% increase, okay? Now you'd think that would be up because you lost 31, then you gained 33, right? Well, that's the trick of percents. They go from 100 to 69, and then a 33% increase from 69 is 91.77. So it's actually a 9%, 8% loss from Q2, from Q1 to Q3 closing. It's a little bit of trickery of numbers, some shenanigans, because on paper, it sounds like, hey man, that's a gain, right? Went down 31, you gained 33. Nope. You're actually farther back than when you started. So that's an interesting little tidbit for the morning. Is that percents can be deceptive. You got to be careful. You got to understand them to understand investing. Growth, not just in markets, but growth, period, in life, in the universe, is measured in percents, not in flat numbers. There's a little Tom Crown morning bit of wisdom for everyone. So we'll do as we always do. Let's zoom out. Zoom out and clear our chart, because that's what we do every day. We clear our chart, we get a fresh look. You'd be surprised how few people do this. But it's important. It's important to always go back. And even though price, man, a little congested, hasn't changed too much. And you never know when something's going to just be a little different, and that's going to be the difference between having an edge and not having an edge. So we're not really going to see too much here on the quarterly. Again, we're looking for support on this January 2019 wick. It does look as if we've fallen a little bit below it today, but yesterday closed above, and this is a quarterly. This is a quarterly or monthly. You also assume it is. So So the, an hour or a 4 hour, really even a daily closing below it, not a huge deal because it's a quarterly support. We're going to look for a close on the quarterly candles. That's when it's going to be a meaningful change. Let's zoom into the 1 month. Yes, as we saw, that's actually a monthly. Price trading. Jeez, man. Come on. Price trading about $20 below right now. Not a big deal. I like to clean this up just because I'm OCD. But those lines don't actually have to be moved. Look at our monthly. Did our monthly Stokes change at all? Nope. Fine. RSI, pretty much where we left it. MACD. Still looking, still waiting patiently to see a new high on our histogram or a new low on our histogram. Have not gotten it yet. And might as well pop on these signal lines just to look. Okay. So we looked at this yesterday for the first time. When should we use these MACD lines? Because we don't always, and typically I don't. I'm not a huge fan of them, but there are times, and right now is one of them. Typically when we're not seeing any change in momentum on our MACD, usually on a higher time frame, I'd rather use it, not a lower one. We haven't seen any movement down. We haven't seen any lighter dark blue bars implying that momentum is waning. But we don't have any significant move on our MACD yet. We haven't set a new high. We haven't set a new low. And so flip on these lines, signal lines and MACD lines, and we see that the MACD line is suggesting that this is a higher high on the MACD, despite the histogram not confirming it. So I want the histogram to confirm it. But this is giving me a little suggestion that maybe we already have that signal. So to keep an eye out for that signal, and we will keep doing that as we do. Monthly MAs aren't going to be important. Really, I think only the Bollinger Band is going to be huge here. We see that the Bollinger Band top band is sitting at 13,191. It's interesting that that band lines up with where we'd like to close this monthly. We'd like to close this monthly above 13,222. Thanks, YouTube. Sent me an email about advertising. Really just because we want to close it above this wick high of July 2019. Bollinger Band lines up with it. It's always interesting. It's always worth noting when indicators and horizontal supports or diagonal trend lines line up or converge. So it reinforces our 13.2 target for this month. Nothing too new here. I guess because we have some new faces joining us. The only other thing of note on this monthly here is we got that Ichi twist, the bullish Ichi twist with price above the cloud. We were looking for that on the 3-day and on the 4-day, and we got it. And price really went explosive after that candle confirmed. This cross up confirms at the end of this month, 2 days in 11 hours. Fingers crossed that we have the monthly equivalent of this signal confirming on the 3-day and the 4-day. The day after the 4-day confirmed. Oh no, my apology. The day after the 3-day confirmed this signal on Ichi, we got the run up to 13.8. So worth keeping an eye on for sure. 13,202 for the monthly, and there's only one other value here in this monthly that it all is important to me. I mean, obviously, yeah, let close above 13,863, whatever, that'd be cool. I don't think that's the probable close here. But one other important value, 11,655. You guys may have remembered that from last month. We talked about that value a lot, and so this is the only other important value because. The reason being is if price closes below 11,655 this month in the next 2 days, 11 hours, then we lose our bullish engulfing. As I said, I don't think the probable close is above 13,860 this month. I think that it is even less probable we close below 11,655. So we have a range here. We have an established price range. Looking like the battle here in the next 2 days is going to be for 13.2. Really seems like it's going to be the only horse in this race. And that's about it for the monthly. So let's flip to the weekly. Actually, you know what? I'm going to do, there's a few time frames I don't look at often, but we'll take a look today just because we have guests joining us. 13,863. So it's crazy. This is just obviously the only important value really left in Bitcoin. We see it on the yearly, we see it on the quarterly, we see it on the monthly, we see it in 2018, or we see it in 2017, we see it in 2018, and then we see it again in 2019 in the run up in whatever, it was like August. Wicked off and started that decline down to 3K. This is the only barrier left. This is it. Right now I have it on the 62-day chart, and we can see there it is again on the 62-day chart. There it is again on the 62-day chart. 62 is a pretty random seeming number. There is a little logic behind 62. Not going to get too into it, but 62 is a very cyclical time period in Bitcoin, and it lines up with, in general, difficulty adjustments. So we do see 62 or 63-day periods in Bitcoin, where the market really does tend to shift back and forth on that 62 days. So it's always an interesting chart to pull up. I will admit, not one I pull up all the time, but suggests that maybe we do have kind of a hidden support here between, well, we don't need this one. That's right at 11,650. We may have a little hidden support here at 11,432. This is probably not going to be that important, so we're not even going to put the price on there. Here we'd sneak it. And another one flat at 11. So interesting. Not going to be too much here for us. So I'm actually going to remove them because I don't want to get the chart too cluttered up. But the point here is, while 62 may seem random, it isn't exactly random. But the point is that all time frames are actually valid. The only ones I would argue that maybe aren't is if you flip to these odd time frames like 90 days. And there's nothing intrinsically wrong with 90. The problem is just that when you go to the 90-day chart, you'll see that a year then gets broken down into 5 candles. A little early, so I'm not going to quiz you guys, but there's a problem with that. And the problem is that the first candle is going to be 90 days. The second candle is going to be 90 days. The third candle is going to be 90 days. The fourth candle is going to be 90 days. But then there's a problem here. The fifth candle, when you have a time frame like this, is only 4 days. You have 4 90-day candles and 1 4-day candle. Yeah, we can argue that maybe it is valid and maybe it is. But in my mind, if any time frame isn't, it's going to be one like this where there's such a discrepancy between the time frame and then the last candle. You know, a 5-day candle is not going to hold the same weight as a 90-day, and having them kind of compared to each other, like I said, there may be value. I'm just not a fan. 15-day. Here's where we can start actually looking at our indicators, because we have enough candles now. Doesn't seem like MAs are really going to show us anything. All of the significant moving averages are moving up. None of them are really close to crossing, but they're all showing upward momentum, so that's good. Bollinger Bands, top of the bands, just like pretty much everything else we're looking at. Ichi twisted back in July. Not a lot here, but this is interesting to me. This draws my eye. This is probably the only thing we're going to find here right now. is that we have that 11,655 monthly area for this month, and we do have a flat top cloud here. Typically, flat top clouds, I assign an attractive or magnetic appeal to them. This one is not really that long, so not super significant, but worth keeping an eye on. There may be some kind of attraction to this level that spans out into the rest of the year, actually. Then we keep it the size of the cloud. A 15-day. Is there any kind of divergence or anything here? All right. 15 days really set up like a lot of the larger time frames in the 60 RSI zone. That's the cooking with gas zone, the fire zone. A lot of potential energy there. Locally, we don't see any bearish divergence on the highs. That's excellent. That's really all we're going to look at that for. And on the MACD, same position as the monthly, has yet to eclipse its previous high. Flip on that signal line again, though. Signal line and MACD lines here also saying the same thing. You have not exceeded the previous rally, so in some danger of bearish divergence there on our highs. Dodge. Okay, nothing too interesting. Let's get down to the weekly. Let's get down to the time frames that others are looking at. On the weekly, moving averages, same situation. That's going to be across the board. Same with Bollinger Band. Really, when you're certain indicators tend to be less useful when the price moves so far away from them. What we can really only discern from them then is in the event of a reversal or a correction, to look to those indicators for support levels that might not be seen elsewhere. Ichimoku, same thing, nice fat green support cloud building. Price is above the cloud, so the trend is up. Bull market barrier, we've been keeping an eye on this, suggesting to us that 11,810 down to 11,250 250 is the zone right now that we do not want to see price go below. That's okay. It doesn't look like it's planning to right now, at least. Weekly, not in danger of that local bearish divergence on the highs. Has already set a higher RSI high. Wonderful. Nothing changed there. MACD not showing us any signs of weakness, but in the same boat as most of these longer time frames, still has room to go before it can overtake its previous highs in the rally in August of this year. Not too much on the weekly. You know what? Normally we go from the weekly down, but right now we're not. We're going to flip because I don't want to miss this action. So it looks like we're getting a little V recovery here. Very nice. Doesn't look in danger of having bearish divergence as the RSI is high. And currently price is really higher than about $1 from any of these candle closes on the 15-minute. So looking solid there. MACD showing nice strong bullish momentum on the 15-minute. Stotch being Stotch. Don't even, you know what? We're not even going to have Stotch on because Stotch on lower time frames is, my opinion anyway. Go. Yeah. So I'm gonna cheat here. I know what this looks like just by looking at the chart, but let's take a look. Wait, oh, this is 50. Thought we're on the hour. Okay, looks to be reaching up. We've broken the 100 moving average. Here we go. This is what the spice I was looking for. Let's hide the bars for a minute and get rid of a little bit of noise. Right here, this is something we've been talking about a lot lately. When we see moving averages cross, 1, 2, 3 crosses in a row, that's exceptional. This is 15 minutes of grain of salt, but the theory is we had a bearish. Oh, this is technically a bullish cross because the 50 crossed the 100, but the 100 is moving down. So we normally say that that cross is likely invalid when the longer time frame is moving against the direction of the cross. And that definitely is what happened. Price kept going down. 50 then crossed again bearishly with the 100. The 100 began to flatten out, and look, the 50 looks to have rejected that bearish cross. It says, okay, I crossed with you, but I didn't really move away from you at all, and now I'm going to cross back. And let's see, price seems to be responding. Yep, ideal scenario. Would not surprise me to see price come back and retest where it crossed 13.2. You look, that's right at 13.2. That's right where we're looking for support, so that adds up. However, it closed above the 100, so the 200 is very likely here. 13.408, and it's interesting because the box we drew yesterday starts right about 13.371. Still looking for this retrace target, just under 5. So that 15-minute 200 looks like it agrees with our target. Move it down to the 30. Nice. I like what I see. 30 closed out the 200, then opened above it. Looking strong to test that 100 moving average. So this is the same one. You'll notice it's just blue now. And the reason being that the 200 moving average on the 15-minute is the exact same moving average as the 100 on the 30-minute. They're the exact same thing. Not in danger of bearish divergence on the highs here. So usually I use wicks to spot my divergences, but right here seems actually, and I don't have a good rule for you as to when you should choose one or the other. I typically just always use the wicks unless I see something that really shows me the opposite. And so what I see here that shows me the opposite, that I'm going to break my rule and not use the wicks and use the body closes, is we see it on RSI and MACD that these candle closes were lower, though that wick makes this, typically I'll go by the wicks. We're seeing in a MACD and RSI that we have these candle closes are lower with higher swing lows versus our previous. And only because everything's in agreement here and we closed above the 200, I'm going to go ahead and say that this looks like a bullish divergence on the 30-minute. Significantly lower candle close and significant divergence on our indicators there. So top of the Bollinger Band's right near our target. Excellent. I don't typically use Ichi. Okay, sweet, I'm glad I did. Don't typically use Ichi on small time frames like this, but it never hurts. Never hurts, and I'm glad we did, because this is a great example of what I was talking about earlier. This is just going to confirm to me that we're going to hit this box. We have that flat top cloud. And that nice fat top cloud, nice and fat. And the reason this is confirming for me is not just because we saw this isn't enough, but it's because of the location. It's right at our target. It lines up with our divergence we just saw, lines up with our moving averages, interaction between each other. Really everything is just lined up for right here. That's not a crazy move. Just at what, 13,372, less than 1% up. Not a huge deal. But when we find, I guess we have also a little signal here that the cloud twisted, suggesting that maybe the trend is changing here. And it was suggesting that right here. Before this candle, actually, because of the twist. So we have a lot of agreement. It's crypto. Still could just for no reason not hit this box, but all of our TA right now is really looking at that box for a test. Flip it out to the hourly, see if we're still seeing same thing. Yeah, what's interesting as well is I decided to use the candle closes for that. Is then we look at the hourly and we have the same setup. The candle closes. If we saw maybe a different combination, like the candle closes were higher here, then back here, then I would probably say maybe I was wrong about that 30-minute. But the hourly is in agreement there, so I think that we can really peg that as a divergence. I think that that's fair. Mostly just because RSI and MACD agree, and they don't always do that. And we're seeing a bunch of other signals that are in agreement. That's going to be likely a fair call. Take a look at. I wonder, is this the top of our box? No, we can't even see it. Where did it go? Nice. Oh yeah, because that's, never mind. That's the same moving average we've been looking at. Of course, it's in our box. Cause now that we're on the hour, the 200 moving average on the 15-minute is the 50 moving average on the hour. So that's just the same one. It went from green to blue to yellow. And everything looks fine there. Not too interesting on the moving. That's interesting. Yep, and then we see that same flat topped. All right, so this can get dragged out really. See that same flat top over here on the hourly price, whether it's below it here, it's going to want to move there, or if it is above it here, it's going to want to move there. Either way, this is going to be an attractive area. Not really too much else. We have a cross up on the hourly, but price is below the cloud, so this is a very weak signal. This is not a very strong bullish signal. Nothing too interesting. Flip it to the 4 hour. Let's get to some real time frames. Okay. Yep, and we see it again on the 4 hour. That just like confirms to me that this, even though it wasn't a lower low in price, on almost every time frame, this was a lower candle close. That's making me feel pretty darn good about that divergence. See it on MACD as well, and we see it. I guess we could divine it here and on our histogram. A little sketch on the histogram there, but that's okay. Ooh, here we go. Here we go. 13,295, man. This would not be a great level to reject from. See the middle Bollinger Band on the 4 hour. While likely not super strong resistance, if the market doesn't have the buying power to push through this, a rejection from here makes this area more likely. With everything we're seeing, I'd be surprised if it stops here. I don't think that that's a very probable move at the moment. It's looking fine. Ichi's showing resistance there as well. But also shows a lot of support underneath us. This is a very strong cloud formation. We don't see any flat bottoms below us. We have a very, very brief period. But the attraction strength in the clouds here with these flat bottoms is typically based on how long they are and how much cloud room there is. There's a lot of cloud room, but this isn't a very long stretch of flat. And then you can see it's broken all the way up. That's not going to provide a lot of market attention. So like we are going to push through here. We did get the twist above the cloud on the 4 hour, and as you can see, that's what rallied us up to that 13,860. Cross above the cloud, very strong bullish signal. Cross below the cloud, very weak bullish signal. Across down above the cloud, a very weak bearish signal. Cross down below the cloud, a very strong bearish signal. It would be nice to close this 4 hour. We have an hour and 40 minutes to do it. Above 13,358. If we get that, likely going to see some continuation. That would not be bad. That would be a welcome sign. Here, we'll look at one more time frame. Let's do. We usually do 12 hour. Let's mix it up. Let's just randomly do the 10 hour. I don't know. Really no different. It's like very, very close to the 12 hour anyway. 5 hours, 40 minutes to go. Looks as locally on this 10 hour, we're going to have a little support provided to us by 1306. Candle closes here. If this 10 hour candle sells off underneath it, however, it will, I'm going to leave it white because if it sells off underneath it and breaks that as support, likely to flip to resistance and then maybe paint a few more candles with that as a local resistance. No divergence there on MACD. I think we might want our signal lines. This is a signal line kind of day, it seems. They don't use them. Okay, yeah, this is what I kind of thought. Because we can see a bullish divergence on RSI. We have a low and then a higher low. And we can see it on RSI. We have a lower low in RSI. That caught my eye, and that's why I turned on the signal line, because the signal line is suggesting that it agrees as well. The lower low on the line. So that's a welcome sight. 10-hour bullish divergence on our lows after hitting the most important hurdle in our way. And then selling off, but really finding support quickly. Crap, I wanted to shoot on the 1 hour. So here's a really strong guide for just today. Well, I guess until this proves not true. The 1 hour 200 acting as support. We see two touches to it, both of which were rejected. Today, I would follow the 200 1 hour moving average. It's at 13,085 right now. But it's clearly acting as support. If we close or break below that, likely will no longer act as support, and we'll see more downside. But so far so good, and we can see that price is actually following really tightly to what we've been saying in the last few minutes, reaching up for that 215-minute moving average into our target box. Golf clap. Golf clap. All right, wrapping it up with the 10-hour. Unfortunately, the 10-hour did paint bearish divergence here. I didn't catch this. On this high touch to 13,868 or 63. Unfortunately, it did. Typically, that would be not a great sign. However, the really only defending factor is that the daily didn't. Daily had a higher high on that 16.8 touch or 13.8 touch. Man, I'm getting dyslexic. So I'm not too worried about the 10-hour. Too worried about the 10-hour showing it. That may have already played out. We'll see. RSI, fine. The daily, good. Thought it gapped up. Lows are still coming up on the daily, so far so good. Or the highs, not ideal. Have to look at it. Kind like a expanding wedge-ish type thing. Man, that these wicks are. So we started with this pattern with this flag, and we got out of it. What are we in now? To be honest, I hate to say this, but to be honest, there's a lot of similarity already to here. We have this here. Man, this fractal just won't quit. Won't quit. Then really, I honestly would say these are the most similar. We have this solid green candle that touches, I guess this is resistance, whatever, followed by a non-engulfing red. We really have that again. So we can't really have this because we had that engulfing Darth Maul candle. So that can't really be where we're at. This could be where we're at. That looks really similar, especially because it's like at the high we had the single touch. And I guess this is 2. So we have to be watching and weary of a 3 here. Something like this, maybe a return to this ascending daily wick trend here. And then not find buying power really. Find it selling off. And then find very little buying pressured, then breaking through that daily trend line. So we have to be looking for this 3. So far, we're not seeing it. We're not seeing the signs of it yet. It may not happen, but it's absolutely something to keep an eye on. If that happens, in the event that happens, very likely that we return to this 10-8 area. Oops. Huh, I guess I was looking at 11-4. Maybe 10-8 is too far away. I would look to 11-4 first. That doesn't hold. Maybe this 10-8 area. It doesn't look too terrible. Oh, that's just some food for thought. Don't have it yet. I think that's pretty good. I think that wraps it up pretty well. Almost to our target. Our AM target. And yeah, this is about the same amount of time it took yesterday. 35 minutes-ish. Cool beans. Well, guys, thanks for joining me again. We're going to stream later. Going to upload this guy. Ed, I'm really enjoying doing these with you. Morning helps me wake up, helps me get in the technical mindset. I hope that you guys find the same value. For everybody joining us that's not a patron, welcome. We're doing this pretty much daily. I like this more than writing it out. Writing it out to me is like a big hassle. Like recording it, starting the day off with a chill vibe. 2 days till November starts. So if you enjoyed this and you're not a patron, check it out. Consider joining us and you can hang out with us every morning here. Love you guys. I'll see you in a bit. I'm gonna turn the recording off.